Overall, spot was buying, mass amount of coins moving off chain, on chain, off the exchanges. Actually, spot was buying. Who was selling? Oh, that was the futures markets, particularly the calendars market, which is linked to the CME and the sophisticated institutions who are trading the correlation to tech stocks.
I mean, narratives is nice, but it's for newspapers, for marketing stuff, and there are some deeper trends, some deeper things going on here, and it's well, like Willy said, is of course technological. It is the better money. So, like the internet, if you want it or not, it will be the thermodynamically better thing, and it will win in the end.
PlanB and Willy Woo are two of the most popular Bitcoin analysts, so you know, a video with both of them giving market updates is a must-watch. In a recent discussion with Will Clement of the Blockware Intelligence podcast, pseudonymous Bitcoin analyst PlanB and Bitcoin on-chain analyst Willy Woo talk about narratives and their role in price movements. Willy Woo notes that narratives are often far off the mark from what is really happening. He adds that he prefers to examine the data to really examine what is going on rather than depend on the false narratives often pushed by the media. While speaking on the same issue, PlanB admits that narratives are nice, but it is important for investors to take note of the deeper trends, such as the technology and Bitcoin's status as a rare asset. It is the better money, and it will win in the end, the anonymous analyst adds while speaking about the world's largest cryptocurrency. We will now take you to the interview. Before we do, please take a little time to give this video a thumbs up and subscribe to the channel. We try to bring you daily updates about the cryptocurrency space, so ensure you turn on post notifications to never miss any of our videos. Thanks and enjoy the video.
How do you guys think through just the idea of narratives for BTC?
I think when I think of narratives, actually, I think of like the newspaper or any, like almost the Bloomberg report. Stocks fell today because so-and-so did this, or the market felt fear because of that. And it's absolutely bullshit, right? Like if you're in the market, you go, no, actually it hit the technical resistance and there was a bearish divergence and we rejected off that because all traders will have to sell because of that signal. That's why it rejected. And then someone found a narrative that also coincided to this day. And so when I look at the Bitcoin price, I'm like looking at fundamentally who's buying, who's selling. And then you can attach like, right. So like recently, the price has sold down very, very quickly off a week ago. And the narrative that's been attached to it has been, it's tax season sell-off. And wow, they left it last minute because the 18th of April is the deadline for many Americans, and there's assumed that that's tax sell-off. And you look on at the data and it's like, well, overall, there was very mild selling from hodlers. Overall, spot was buying, mass amount of coins moving off chain, on chain, off the exchanges. Actually, spot was buying. Who was selling? Oh, that was the futures markets, particularly the calendars market, which is linked to the CME and the sophisticated institutions who are trading the correlation to tech stocks and the S&P. So you got this narrative that it was a tech sell down, but actually it wasn't. It was traders trading this correlation. So that's what I think about narratives in terms of price action. Like I think they're too coincidental to some sort of reasoning, but not backed by any kind of the fundamental data you look at if you're looking at the markets properly. What you just outlined, like yields increasing, tech stocks get pressure, then that is right. It's those guys that are selling down Bitcoin, but you can see that in the data. Thinking, it's correlation is not causation. I think PlanB has taught me, actually a lot of people have taught me who have come from mainstream finance world. That might have been true in 2017, but man, there's the beautiful carry trade to take the other side and yield, what is it like? I think it was up to 60% annualized, taking the other side and taking the heat out of the market. So I don't think it's so reflexive now. And you see that with a blunt top and a rollover, and none of this exponential spikes you'll see where people can't take the other side. So I not so much now, not for Bitcoin.
PlanB, the popular independent analyst behind the stock-to-flow model, also talks about the issue of narratives. He states that narratives are for newspapers, and there are deeper trends that all investors must look out for, such as Bitcoin's superior technology and its rapid adoption rate. Listen to PlanB's explanation.
No, I was about to say the exact same thing. I mean, narratives is nice, but it's for newspapers, for marketing stuff, and there are some deeper trends, some deeper things going on here, and it's well, like Willy said, is of course technological. It is the better money. So, like the internet, if you want it or not, it will be the thermodynamically better thing, and it will win in the end. The Earth is round, not flat, and whether you spin a narrative around it that it's flat, it doesn't matter. Maybe it delays it a couple of years, but it will win. So, and also financially, it is an asset. It is an accepted asset, more so than a couple of years ago, and markets are maturing. And the cash and carry trade that we talked about a lot last year almost completely disappeared, which is normal, which is a sign of maturing markets, because a contango premium of 40, 50, even 60% is can't go forever. People. So, in my worldview as an investor, as an ex-institutional investor, it's all about arbitrage. And in the beginning, of course, there was arbitrage in Bitcoin only, with exchanges in Korea and exchanges in Europe and the US, and then making catching the differences, which was an easy way to make money. And now the future, the cash and carry trade was of course a very easy way to make money, and everybody and his mother is doing it. So now that premium has gone down to like 5%, or what is it today, which is still better than in Europe. You're minus 1% on your bank account or something. So there's still, but that those parties are now in place. They have their funds. They're doing this trade, and this market is more efficient and bigger and stronger. So what's left is, for example, the volatility trade. That's one of the big things. You can still make 25% a year with covered call writing and capturing the insane volatilities that have lowered, by the way. But it's obvious for Bitcoiners that the trend in the price, the fact that it's better technology and it will win and it will be adopted over time, is larger than the volatility that's caused by narrative X, Y, Z. But so that's one of the other things. And of course, the big play we're seeing right now, and it's very interesting, is the arbitrage with the fiat world, because Bitcoin can be seen as a foreign exchange thing. So not even a tech stock or a commodity, but like a currency. It has a interest rate, and you can exchange it with other currencies. So you can make very hard arbitrages there with enormous sums of money. And it wouldn't surprise me. Actually, I know that some traditional parties are doing that, and yeah. So I guess with all the central bank, as long as the central banks do crazy stuff, which they, in my view, have to do, because they have positioned themselves in a corner where they can't get out. They can't raise the interest rates because they will kill the stock market, bond market, real estate market, everything, the economy. Nobody wants to do that. So they're doing stupid stuff like printing money and more, while saying they're tapering, which, well, I think is the only thing they can do. But that creates opportunities for arbitrage-minded people and just savvy investors. So that will be a big drive in the market for years to come, I guess.
In its relatively young years, there have been a lot of narratives about Bitcoin, and there will be many more to come. But as PlanB explains, investors must learn to pick out the things that really matter. And at the moment, nothing matters more than the fact that Bitcoin is winning and crypto is winning. It might not be immediate. It might even take a couple of years. The crypto industry is going to become a multi-trillion-dollar industry with lots and lots of opportunities for savvy investors. Thanks for watching the video. Remember to click the like button and drop your comments about PlanB and Willy Woo's interview in the comments section below. You can also subscribe to the channel and turn on post notifications for more videos like this.